Good afternoon, everyone. Welcome back to Short Verticals. Good to have you with me this afternoon. Hello. What do we have? Chris and Jack and Greg and Robert and others. Hey, thank you so much for joining me today. It's good to be with you as we're going to follow up on, what happened last week since we met. How has the market responded since we talked about that kind of the long and short term outlook on that. We'll look at what's going on with the trade that we did. And then we're going to get into some things I want to teach you just about Fibonacci's that I keep mentioning, hey, I ought to cover this, I ought to cover this. Well, we're going to cover it in this session. So hang around for that as well. And then we'll look at some potential opportunities out there that we can paper trade. And then we'll wrap it up all nicely with a bow and send it off for the holidays, because I got to say I won't be back again, but I'll for a while. Probably ought to finish that off. I will be back, but just not till after the holidays. So I'll cover that at the end. But let's get out there and cover some of the disclosures that we needed to discuss at the very beginning. And so do remember that options do carry a high level of risk and are not suitable for all investors. Information is for general information purposes only and should not be considered as a recommendation to buy or sell or investment advice. Paper money is for illustrative educational purposes only. Do remember that short options, and we do talk about short options in this class, they can be assigned at any time regardless of whether they're in or out of the money. Investing does involve a potential loss risk, including principal, and past performance is not a guarantee of future performance. And then also here are your option Greeks in there. And then we don't use a stop, but if a stop is used at some point, if we do put one on, then do note that it does not mean you're guaranteed to exit at this stop price. Okay, it does turn into market order, and you can get filled different spot than you think. All right, so with those covered, let's jump out there and just take a look at the market. Let's kind of come back on what happened since last time we talked. And when we were discussing last week, what were we about? December the 4th. And so let's zoom in on this. We can see a little bit more clearly what's gone on. And there was December the 4th right now. So at that time when we were talking, we were mentioning, hey, the market overall has some short-term kind of bearishness. It's kind of rolling over. It just was losing some of the bullish momentum, right? And then we were talking about being longer term bullish. And the way we came up with this, and I saw some comments in there. And by the way, I do appreciate the comments. Anytime you want to leave some comments in the comments area, it's great. It allows me to kind of hear from you personally what you're thinking, and just your thoughts on the class. So do post comments out there, please. But anyhow, let's go ahead and click on the beaker. If you remember, I brought up the MACD, the two lines, MACD. If we come down here, it's going to be the two lines MACD. And let me click on that, add selected. Now, this is a comment that did come up that I just want to address, where it talked about what is the proper setting for this. And there really isn't a proper setting. There are kind of two settings that are typical with the MACD. One is the 817.9. And it's a little bit faster, of course, than the 1226.9, but either one of them can work. It's like people say, hey, which one's better? It's not better. The shorter one can often give a faster, earlier signal, but it can also give us more inaccurate signals, right? The longer one will kind of filter out some of the noise and some of the bad signals, but it can also delay an entry and exit point. So, it's always a challenge that we deal with as traders. But let me go ahead and apply that. And, just to... Again, I do have this on the 1226.9 versus the 817.9, but if I had it on the same 817.9, these crosses would actually, in fact, let me just do this. I got to show you this real quick just to help you understand the MACD real quick. 817.9. So I'm going to just punch in 817.9 on this, and there we go. Okay, so this actually is the MACD. So you have a signal line, and then it's basically two different lines. It's two different moving averages. It's actually a moving average, and they take an exponential of the first moving average and plot it. And then basically these two moving averages go back and forth. And when you see them cross, like when you see this, the blue one here, let me make this a little bit bigger. I'm going to pull this up here so you can see it's just a little bit more, so you can understand just the construction of this. When this crosses, see when that blue line crosses below that yellow one? That's the negative cross. That's where we get the signal. And the histogram is simply showing us the difference between those two lines. And so you can see they almost crossed there. That's where it came back up to the zero line, but didn't. And then it came back down. And that shows us this big difference here. But when it came back up, there's a cross. That's where it crossed the zero line right there. And now this is showing us the difference between the, how strong. So how much more quickly one moving average is moving over the other one. All right. And so that really, this is the MACD, and this is the histogram, which shows us the difference. Just for most people, including myself, maybe I shouldn't say most people, but for me, I can see the difference in the lines better here than I can here, right? I think this is a better visualization. But that doesn't mean that the two lines aren't, worthless, right? The two lines can help us see that long-term momentum. And I'm going to take this back and change that back to the 1226 line, because I am looking for a longer-term momentum outlook, right? And so I have this longer term. And now let me back out here so we can see more of the SPX. And we can see this actually, these two lines crossed, here's a signal line, crossed back or crossed above the zero line back in May. And that would indicate that the longer term, it has bullish momentum. So one way, at least the way I kind of look at it as in my head, is this is more shorter term momentum and this is longer term. All right. And so this being above that zero line indicates that longer term momentum. Now you see we had a little bit of a dip here where it dipped down below, but it then came back up and it has been back above that. And so that's where last week we were talking about it being short-term bearish, because when we were talking last week right here, we were seeing that histogram roll over, indicating waning. It's still bullish. It's just waning on the bullishness, but so it's dropping down, but the longer term is still bullish. And so almost like a pullback in the long-term trend, if that makes sense, right? And so it's just a good way to kind of combine the two time frames with the MACD. And so that just kind of lays the land for it, is lay of the land, right? Now, since then, what's happened? Well, since then, we've had some economic releases, and sometimes these economic releases can almost act as like maybe an earnings announcement, if you will, for the market, right? Not all of them. We get stuff like the ADP report that comes out, and that's not a huge deal necessarily. But we did have trade balance, and that carries a little bit more weight. The trade balance was negative $52.8 billion, I believe. Yeah, $billion. I was going to say trillion, but I think it's billion, yeah. And which is better than expected, because the expectations were negative 62.5 billion. And so that was great. We only overspent by 10 billion. And so that was a positive note. But then the big news, of course, which is kind of the earnings for the market, was the Fed announcement yesterday, right? That came out, they knocked it down from about 4% to 3.75%, the federal fund rate. And then they just had lots of verbiage, and I used to go through and dissect all the verbiage and see what little words they changed. And there's things you can look up that actually they'll go, highlight them and stuff. I mean, when I started doing that, it was before you could even almost find them on the internet. But it would talk about what changes in the language, and they're very, very cautious about what they do with the language and how they change it. But just the general consensus is that, hey, look at, they're a little bit concerned about unemployment, which is still low. I think it's really interesting to me, because the unemployment is still, for a lot of as I've been looking over the market for years, it's kind of like this idea, and it changed, but generally like about 5% unemployment was considered full unemployment, because people are still in flux. People are changing jobs, so you never get zero unemployment. So 5% was kind of this low unemployment. And so they say, hey, we want to keep unemployment low, and we also want to make sure that inflation is low. But a lot of times those two will go counter to one another. And so, if unemployment or inflation, that's probably the better one to talk about, because right now I think we're dealing a little bit more with inflation. If inflation goes up, then they want to raise interest rates to slow down the economy. But when you slow down the economy, then the unemployment goes up, right? And so then they lower rates to try to bring the unemployment back down, and hopefully inflation's gone down, and so it kind of totters, and they're just trying to make the best of it, right? Well, right now they're saying, hey, we got this cut because we're worried about unemployment, so it's bringing up, it's a little bit of concern on that long-term outlook, but we're only looking to cut it one more time, or one time next year in 2026. Now things can change, right? Data will change, but that's kind of the current outlook looking forward. And so, the market's trying to assimilate that and say, okay, what do we do with this? And in the short term, it looks like the market took it as more of a good sign. As it was dropping down, that kind of gave it a little bit of a boost yesterday, right? It took off. And so it's kind of gone sideways from when we talked last time. It really hasn't gone up, maybe up a little bit, but just kind of gone sideways, and really hasn't made a strong move in one direction. But but we'll see. I mean, it's starting to, if this holds at the end of the day, we could see possibly starting to move back to the upside and possibly break that old high. And so it looks like that could have been the catalyst to give it a little bit more bullish oomph in that. So with that, we're going to look at this as the long term still bullish. The short term has been kind of neutral to bullish. And we'll keep that in mind as we go through and look at the potential paper trades that we're going to do here shortly, right? But a lot of the other indices are kind of following along with that. If we look at the NDX and stuff, you can see in a very similar fashion, it's had that run up, but it's kind of gone sideways for the week. Now, this one hasn't necessarily made that pop that, and not that the SPX has really popped, but it hasn't really had the same kind of reinvigoration of energy. You can see we still have lower highs here on the MACD, even though the longer term is still bullish. And then just the other one that I want to show, and actually, I don't know if you guys are picking out, there's some price patterns that are popping up in here that may play a role. Well, maybe not, because no, the Dow is higher, right? The Dow is kind of the one breaking out, and so it is making the new lead to the high. And so we are seeing some energy there. So, it's kind of different across the board as to where it's being pumped and where it's not being pumped. But so with that in mind, let's go ahead and look at the trade. Now, last week we put on a trade on Home Depot. And let me get rid of what we had here. So let's follow up on that. On Home Depot, what we had was a strong downward trend, right? We had a lot of bullish momentum for quite a while. And it came back, it hit resistance, it was bouncing off. And so this is what we were looking at last week, bounce off resistance. And so it was looking good from a technical standpoint. Now, it was looking pretty good until today, right? As we just mentioned, some of those stocks had a pop after that Fed announcement. And this is the challenge sometimes of holding, some a trade like this over an unknown situation like the Fed announcement. But what it's done is it kind of popped back up to resistance. And so this one leaves us in a spot where we say, okay, well, what are we going to do with this, right? Do we go ahead and exit the trade? Or do we just, hold on to that? Because that was a January, what is that, January 17th, I believe, on that one, somewhere in January. Yeah, so 16th, yeah. January 16th trade. And so we still have time, right? We still have a lot of time for this to work out. Well, here, it's got a lot of upgrades, positive news on Home Depot, says Chris. Yeah, and so obviously it's responded. So here's the question, though. Is that going to be enough to change this downtrend, to give it new life, to have it move higher? Well, and here's where everyone has to decide for themselves, how are they going to play that? So some people say, you know what? That is not what I was anticipating. I was anticipating it simply holding on to. Let me move this and move that down. Say, okay, there's my longer term resistance line that's been holding for a long time, right? And it should have held that, and it didn't, and it popped higher. Now, one thing I want to say, as a general rule of thumb, generally speaking, the diagonal trend line of some sort doesn't tend to be quite as effective as a horizontal. And the reason why is because you can draw diagonal lines anywhere, right? In fact, what I see quite frequently, is people drawing diagonal lines like something like this. Now, is that truly a trend line? I would say no. And why is it no? Well, because how many points do you have there? You have this point and you have this point, right? That's two. Well, guess what? You can draw a line between any 2 points on Earth. You know what I mean? You can draw a straight line between any 2 points, and it really does, in the case like this, maybe it may or may not mean something. What really becomes important is when you have a third one. When you have a third one, then it's like that confirmation. So, when we draw diagonals, what we want to look for is at least 3 points of touch, right? Now, this one, we got 1, 2, and we got a whole line here, 3, 4, 5, 6. I mean, there was a lot of touches, like down, kind of held there, hit again. So I could say it's 3, 4, 5. And so this one had multiple touches. And so this was a fairly significant trend line. But however, it was broken. Okay. And so here's the deal. We could go ahead and exit this trade. We're not down a lot on that. Let me go ahead and go back over to it. Let me get rid of that yellow dot. It's too bad because it was actually this class. I need to have this class in the morning, because when I have this class in the morning, the positions have looked much better on the days that I've taught the class, right? And thought, okay, this is what I'm going to do with it in the class. Then it's 4 or 5 hours later when it's time to actually present the class. But down, down, it was basically a break even this morning, but down $95 at the moment, right? And so we could take that short loss and get out of it, or we could hold on to it, And I think there's logic in either one of them. Now, those that might hold would say, hey, well, look okay, yeah, it's broken that trend line, but this is where the gap was, right? It came down, it gapped here, it rallied back up that gap, and it couldn't break it, and it came back down. Now, it jumped up again, but even with the jump, so far, it hasn't been able to break above that either. It traded above it, but where is it going to close? And that's going to be the question. So we're going to keep an eye on that and see. And you know what? If it breaks above this by the end of the day, I'm going to go ahead and exit that trade, that paper money trade. If not, I'll let it ride. Let it ride. But again, I just want to walk through. There's multiple ways you could look at this, that one could look at this and decide, how to take it, depending on how they're reading the technicals. All right. Chris says, hey, I'd say the trend has changed. You should be conservative and exit. And I wouldn't argue that too much. Generally speaking, for a trend to change, there's lots of ways you could argue a trend, right? Now, some will look at the moving average. Well, the moving average is still going down, right? And then other people would say highs and lows, like look for higher highs and higher lows type thing, right? Well, if we were to back out, in fact, let me look at this a little longer time frame. And if we're going to draw in, the highs and lows, it'd come down, there's a low, it rolls over, here's a high, it'd say it comes down, and this is almost like a little hiccup here, but there's another low, obviously a high, right? And there's a low, and here's where we're at, okay? So the question is it making a higher high and a higher low? Because that, is often heard as a change of trend, right? Higher highs and higher lows. Whoops, I don't want that to disappear. Let me take that off so we have our lines there set. So let me do this. Okay. Is it a higher high and a higher low? That is the question, right? Well, let's look at it. The lows, so if this is a low, this is a higher low, right? Now, if we look at high, here's a high, here's a high. And where are we now? Well, we don't know. That's the point, is we don't know. This could be a higher high. Now, if it goes above this, if it closes up above this line, then yes, at wherever it turns, if it closes above that, if it closes the next day higher or a week later, it doesn't matter. It's going to be higher, right? But if it rolls over right here, it will not be a higher high. It might be an equal high, but it's not a higher high. And so this is a really good example of we're at an inflection point. I hope everyone sees that when it's right back to this point right here, it's not a higher high just yet, but it's potentially, it's a potential. How come that's not erasing? It's not erasing what I wanted to erase, but there we go. It took a minute. But when it's right here, it's not a higher high yet. Like if at the end of the day, this closed down here, like if this candle, came down and closed like way down here, you wouldn't say, oh yeah, it made a higher high. No, it rallied back and made kind of an equal high, right? So we'll see. But again, everyone can look at that. We all have different ways to interpret the market and see what we see. And so, take what we need out of it. All right. So with that, now, so we want to look over several stocks. Actually, let me get to something else. So we had some homework last week. We talked about 2 stocks last week. I said, hey, let's keep an eye on these for potential opportunities for the next week. And Newmont Mining was one of them. This one came up. And we noted that this was in a triangular pattern where it had been winding up. We talked about it looking to pop, right? Well, look at this. It did pop. Now, it didn't pop with a lot of energy, but you can see it has picked up since then. I mean, it's still moving higher. And sometimes, even if it doesn't break with like some super solid volume or anything, and people argue, whether volume is accurate or not. But the point is that if there's any concern, sometimes even I've seen stocks that don't break with volume, that it's kind of like it has this gravitational pull towards this price pattern. But once it gets so far beyond it, the gravitational pull lessens and lessens, and it can start drifting off into space without anything pulling it back. And that will happen from time to time. But so we got Newmont Mining now. Here's the question is, has this one moved too late, for our class? Well, it'd been nicer to get in here closer to 93, 94-ish, maybe put something down here around 92. It's up there at almost 100. So this one may have moved. Sometimes that's where it's a challenge in the timing of teaching once a week, right? And that's what we talk about having, just homework to look and see if you see the patterns and can, see them in your own mind's eye and watch them develop. It's a training episode, right? Let's look at Uber. We talked about that one as well. And one thing we're talking about Uber was looking for Uber. Now, again, we were talking about it on the 4th, and so it was right here. So kind of this is very similar to our Home Depot example. So this is kind of fun. It was giving us on the 4th, it was right back up at resistance, right back up there, right? And so we'd say, oh, is this going to make a higher high? Well, what happened? It did kind of poke through there. Whoops, what happened there? It did kind of poke through there a little bit, but then it rolled back down, And so in the end, I think if we were to draw this one out, I draw like this, like low, high. I draw this low, high, and this is where we're at, right? And so this one, still making, I'd say this is the high, this is the low, this is the high, and we don't even know where low is. I mean, again, this could be a hiccup. We're not drawing it. One thing to be mindful of is we're looking at the general direction. We're not saying, okay, 2 days down, 2 days up, 3 days down, 1 day up. We're not looking at every little thing. It's just the general movement, right, to get those lows and highs. And so sometimes, when you're trying to identify those lows and highs to identify those trends, you gotta squint your eyes, Now, people laugh at me and say my eyes are squinty anyway, but still, if I squint my eyes, then I just see the general candles, and it helps me draw in the general movement and not the up, down, up, down, down, up, down, up, down, up, down, up, down, now, all that stuff, right? So now come back to this, though, is so I thought, oh, it broke down. Now it hasn't moved too far. This one has another kind of technical aspect that we probably ought to bring up, which is, well, where is it now, right? And this one happened to have some support right about here before. And if we were to bring this out, in fact, let me back out a little bit more. I think we're going to find, yeah, that has lots of areas where that one's hit, right? And so a couple things to keep in mind when you're talking about support and resistance. There's a few things that make an area more impactful than another. And one of them is the number of hits. The more times it hits, the more impactful it is, or kind of solid, you could say it is. The more recent it is, then the more impactful. And this one has both. It's hit it recently, and it's hit it a number of times. And so this is kind of in between a support and resistance area. And so not much to do with that one after it did drop so hard. Okay, but let's look at a few others. And one of the things I want to incorporate into this, I want to talk to you about that Fibonacci that I brought up at the very beginning. Let's address that. Where, because there's lots of stocks out there that's looking at, let me look at INTC. I'm just going to bring up, this one might be a good one to use. Deb, how you doing? What was the other one I was looking at? Well, let's look at INTC. Okay, so here's the thing with Fibonacci's. One of the things that's good about Fibonacci's is drawing them from a support to resistance or resistance to support, and it can help us identify, where pullbacks should be. Now, I'd look at this as kind of a support level right here, and it ran up. That's one run. It pulled back. This is another run. Again, we're looking for the major movements. You don't want to be drawing Fibonacci's on little teeny things like up, down, up, down, up, down, because what you'll get is lines that go like this, and it won't tell you anything when you see this, right? You're like, well, there's support and resistance in there somewhere. It's like, yeah, you cram enough lines in a small area, you're going to have something be support or resistance. So we're trying to draw kind of the bigger moves. And so what I want to do here is just kind of start and draw from the support level to this resistance. And what that should tell us with our Fibonacci's is retracements, right? Where it should pull back to. And so let me use this. Let me draw these on there. And what I'm going to do here also is I'm going to reset these to show you kind of the standard setting on these. So let me edit this, and I'm going to say reset to factory default and hit OK. Let's see, do it. Let me remove that. I think it did. Yeah, there we go. Okay, so now let me move this stuff down. Let me actually get rid of this one. Let's hide that. And I'm going to bring this down because I want to focus on the price action. So I drew it from support to resistance, and what we have is all these lines. There's a ton of lines in there. Plus down here we have some actual projections to the downside. But really what this is trying to do is tell us, okay, from this move, from the low that it had down in here, what's the run it had, right? And where's the retracement? So this is 23% off the top. This is 38% off the top. This is 50. So basically it came back to here. It's 50% pulled back from that full run is what it's trying to tell us. And 61 and stuff. Well, here's the deal is there's too many lines in here, and some tend to be a little bit stronger than the others. And often it's these middle ones that tend to be stronger. And also, when you're looking at a flag pattern, you're looking for it to run up, pull back, bounce, and run up again, right? And that's kind of the whole idea of the flag. And so the question is, if it comes back and bounce and it runs the length of the pull, so it runs, from this level to this level, runs that length again, after it bounces, how far up will that go? Well, what we can do is change those Fibonacci's to help us identify the length of that pull. So let me show you this right now, okay? So check this out. What I'm going to do is go into Edit Studies on this. So follow along with me here, Edit Studies. And now I got to go back and look at how I had mine set up before. All right, so what I'm going to do is basically take off, well, I'm going to change this one. I'm going to leave that on there. I'm going to change this one to a -2. I'm going to change this one to a -0. Did I get negative in there? 0.618. It's just these same numbers we have down here. And this one is going to be a -0.5. And this one is a -0.382. Next one is 0. Wait, hold on. How come I have these? Hold on. Let me back out on this. Let me reset this. So why is that doing that? I'm going to work from the bottom because I want to keep these. I want to keep these 3. What I'm going to do is I'm going to get rid of this 23. I'm going to make this easier. I'm going to get rid of the 23. I'm going to get rid of the 78 because those tend to clutter it. And so it's just going to give us the middle ones, right? And then I want to leave that one red. I'm going to change this 50 to kind of a darker yellow. And I'm going to change the outside ones of that to a lighter yellow, right? And then also I like with the 0, I want to make that a little bit heavier. So I got the 2 or the 0 as a 2 width. And I'm going to take the 1 and make that a 2 width. Okay, that's good. I got that already. Okay, so very minimal changes right now. Really haven't done anything. Taking off the 23, taking off the 78, and just change the colors here, right? So now what we're going to do is we're going to invert everything. And so we're going to go with those negatives I was telling you about before. We're going to go negative 0.382, negative 0.5, negative 0.618, and a -1. Okay, I'm going to uncheck that one. So I just inverted the numbers before, and just like before, I'm going to match these same colors. And so the 38.2, I'm going to change that one. Oh, did I get rid of my 0? Oh, I got rid of my 1. Sorry, I guess I need a 1 in there. I apologize if I didn't catch that. I do need the 1 in there. All right. All right. So negative 38.2, I want to make that one yellow, lighter yellow. Negative 50, I want to make that the darker yellow, and negative 61.8, make that the lighter yellow. All right. And so let me show you what this does when we make those changes. And so I'll leave it there just for a second so you can see it. But it was really minimal changes, right? We're just taking off the 23, taking off the 78, and just altering some of the colors in the middle and inverting those same middle numbers we had before. That's all it was. So I'm going to make sure I have everything 0, 1. I'm going to put a -1 in there as well. Get these as a 2. Okay, I'm going to make those so we can see those solid. All right, I'm going to save that as a default. Now watch this. What happens now is it clears up that middle part. And so now we just have the 38, the 50, and the 61. So now we can more clearly see where those pullback levels should be. But on top of that, what it's going to do up into the future is going to have those projections. And so now you can see those negatives became like these projections in the future, 38, 50, 61, and we should have that 1. That -1 should be up there. I guess I didn't get that one clicked. So now when you draw it again, I'll just go ahead and click on that and draw that. If I save it as default, it's always there, right? And here's the deal. When it bounces off this lower one, if it goes a flagpole, it'd come up to this upper one, kind of the lower, lighter yellow, or the middle one, the darker yellow, goes up to the middle darker yellow, or the higher lighter yellow goes up to the higher lighter yellow. And so it basically runs that distance again. And so right here, if it bounces off of this, off this 50, then the ultimate target would have been up there. Now it hasn't reached it yet. Now it has actually kind of had a short-term pullback and maybe a longer-term play. So let's remove this and let's redraw this from here to here. And this is what I want to say. Be careful about getting them too small, because again, you get something like, I'm just trying to see like here to here. If you draw this like this to this, you'll see like the lines are too tight. And they'll say, well, how tight is too tight? Well, I don't have an answer for that. It's just, you just got to kind of be smart about it and say, okay, yeah, it's getting pretty tight in there. All right. But what we've seen here is it made this rally. It's pulled back. Now it's sitting at 38.2. This is kind of the first level of support. And then look at the other ones as other potential levels. Now, one thing that's also can be beneficial is looking back and saying, where have any of these acted as support resistance in the past? And so is it right here? Is it right here? And it looks like this 62%, I'm just going to round that out and say 62, has acted as a level of support. So that one might be a little bit stronger. But typically speaking, on a flag pattern, if it breaks through that 62, then it's kind of a failed pattern. It shouldn't go that far, and we're anticipating the full retracement. So the idea being is on that run, this is the general area that we're looking for a bounce. When we look for bounce, then run from there. Okay, if it doesn't bounce here, then it would be anticipated to break and fall back down. Now these are just general ideas, but nothing's 100%, but that's just generally how one might look at it. So that's one way we could draw it on that one. Let me give another example. I'm going to pull up MRK. Like, I think this one's a pretty clear one because we can see a good run here, right? Everyone sees support down here and resistance up here. And what happened to my chats? I want to see my chats again. There we go. So we got our support. Let me draw that in. Here's our support right here. Here's our resistance right here. We're going to go from support to resistance and get an idea of where those support levels should be. So let's go ahead and do that. Let's draw from support, get our Fibonacci's, pull that up to resistance right in there. And look at there. It's pulled back 38%. It looks like this is potentially bouncing, right? So this is starting to get some life. Starting to roll up on the MACD. So here's one that we could potentially look at for a potential trade because it's pulled back to one of the support areas that we'd anticipate and starting to show a bounce off support. It had a good strong candle there, a little bit of a hammer at the bottom, right? It closed it back above the hammer. So there's some potential on that one. Let's also look at one other. And, part of this is going to be like, that homework assignment. Oh, I already had them on here. I got to remove these. And let me get rid of that too. But this is like that homework, to say, okay, let's look at these, and I'm not going to be able to get through them all, but we'll get through what we can, and then we'll follow up on them later. So looking at Apple here, now we have it here, drew it again from that support to the resistance, and I actually want to bring up a bearish one. I'll show you a bearish one in just a second. But notice how on Apple it's pulled back, and this is interesting because it's come back to that 38% and kind of chopped around that. And you can see how it's kind of been holding there between that 38 and that 50, right? And this is also where it had some old resistance on that, or a big gap up. And it's just been in this area. Now notice today it dropped down, it touched at 62 and then came back up. It'll be interesting to see where Apple closes on the day, but this one is potentially, creating that hammer to hammer out the bottom. Now, let me see. Let me just show this one. PAWN. Did I get that right? Nope. No, PANW. Maybe I get it right. Is that right? PAN and get all those others out of there. There we go. Okay. So I wanted to bring this one up to give an illustration of doing it on the bearish side. So again, we want to draw in the direction that we're going. And so this one, the last move that we had was right here was resistance, right here was support, right? And so, if this is nice to see when it's kind of coming up in here to get an idea of where to draw those from and to. So we have our Fibonacci, we're going to draw it from resistance up here all the way down to support down here. And this is, again, another example of as it rallies back up, now, instead of acting as support, this is going to give us an idea of where we should potentially see some resistance. And it came up to that 50%. Again, that was, it's interesting. Check this out. It's interesting to me how, like if I were to draw some horizontal lines, that 50, it was like the middle of this big candle, right? It was a support level right there. And the 62 was actually one right here, a recent one there. So there is some strength to these. And that's the 50 is where it bounced off of it and rolled back over. And so hopefully there's a couple examples in there that can give you an idea of how to apply those Fibonacci's and use them as projection. And the other, good thing about using this is when you get a stock that's at an all-time high. Just trying to think if I had one off the top of my head. I mean, Newmont Mining was up there, right? That we looked at. Wasn't that up there? Yeah, Newmont Mining was. I don't have, let's see. Let me remove all this stuff. Let's just remove all this. All drawings. So, yes. Okay. So, with that gone, I don't see, this isn't a real clear example of like a good one to drop from and to, because it needs to go from support to resistance. And that was a support to resistance we had. It came down, it bounced off to 62, the lower support level. And so far, where is it right now? Well, it's at the lower target, if you will, right? So you can see how that works. So that's a great thing. But see, when it gets up above the all-time high, you don't have an idea of where those are. And so those can be some pretty good just opportunities. It's just a way to point something out where nothing had existed before, right? Is probably the best way to say it. Well, okay, so let's go back. Let's go to, was it MRK? How about with this one potentially bouncing? Let's go ahead and place our trade on this one, shall we? We'll do our example trade on this. So it's around 97 that it looks like our support is. Let's see how that plays out with, what kind of money it provides on it. So we're going to go out to the January 16. That'll give us what? 36 days to expiration. And if we look at something, these are in 5, so we can't go, $97. We're going to go 95, 100, that kind of thing. So let's sell the 95. So a little bit below that support level, just a little bit below this. I think 100 is getting a little bit aggressive, right? So 96.9, that's close enough. Let's see what it offers here, though. So if we sell the 95 and we buy the 90, we got a 5-wide spread. And we're getting about $1 there. So here's the deal. Is this one is a little bit on the low side as far as credit, where it would have been nice to have something like sell like a 96 or a 97. But it does give us a little bit more of a buffer zone. Now if we have a credit if we have a 5-wide spread and we have a credit of $1, then we can do the math in our head that $5 minus $1 gives us a risk of $4, right? And we can do the math in our head. We'll do this anyway, but $1 divided by $4 worth of risk is going to be what, 25%, right? Yeah. So again, easy math in there. So we're getting about a 25% return on risk on this one. And so, some will say, okay, I want to at least have, X amount. And there's so many variables that can go into that, but you just got to look at it and say, I'm giving up a little bit more, I'm giving it a little bit more space. I'm not real tight. I'm not close to that strike price. And so, I have a little bit of a buffer there. And so maybe a little bit less credit could be worth it, but everyone has to decide for themselves. And I get the, less than 1% per day. Yeah. I mean, there's lots of different variables that people could look at. It would be nice to have this a little bit higher, like $1.10, $1.30, something like maybe the percentage is closer to the delta, right? So this is kind of this approximation of probabilities of being, in the money, right? A 30% probability of being in the money as an estimate. And, we're a little bit less that. It'd be nice to see that closer to a 30% there, which would be about $1.10 or something. I think if we got $1, let's just try $1.15 divided by, what would that be? 385, I think. Yeah, see, that'd be closer, right? So it'd be nice to get like $1.15. We're going to go with this for our example trade. With that risk of $4, we can only do 2 contracts on this if we're risking 1,000 overall. So let's put in our 2 contracts. And we'll go ahead and hit confirm on this and just make sure that we have this. I'm going to leave that on the dollar. Honestly, I don't want to go any less than that. If I don't get filled, then I don't get filled. And sometimes that's, things we can do is, if we didn't feel like we're getting enough there, we could even say, okay, I want that $1.15. And if it happens to pull back a little bit and gives us that, maybe I leave it there, right? And then hit the confirm and send and send that off and say, okay, if I don't get on the two contracts, $1.15 is going to give us 230 of total profit. And we have that $5 or $500 wide risk times two contracts is 1,000. So 1,000 minus the 230 profit is a 770 risk. So let's go ahead and send this. I mean, paper money may fail just because it's paper money. Live, obviously acts differently. But if it doesn't fail, then we go, okay, didn't lose anything. It wasn't quite, where we wanted. It wasn't quite enough. And sometimes this is a challenge when you get something with like lower, volatility. There just isn't sometimes not enough juice. Like I was looking over J&J earlier, as an example as well. This one has actually taken off quite a bit, but when I looked at that, there just wasn't a lot of juice in it, even though, the trend was nice, coming up, bouncing, coming up, bouncing, coming up, bouncing. And, it was looking good, but there just wasn't quite enough juice. And sometimes that's the way it goes. But we still have others that we can keep an eye on, right? I mean, we're talking about this Apple. We talked about Newmont Mining. Did we look at one other? Did we look at MDT? Now let's look at MDT real quick. And so this is another one that had a nice run from a support to resistance. And so again, I'm going to draw our Fibonacci's from support to resistance. Ran into my water bottle there, and it bounced me back out. And look at this, it's come back down. Now, check this out. The 38% just happens to be where the gap is. And so there's some support here, right? You can see pretty strong support right here from that gap. It's come back down and it's sitting at that support level. Now, it hasn't really, moved off of that, right? It's still sitting on it. It's tested it 3 days in a row now. We still have some, bearish momentum on the MACD, so that hasn't turned. So we haven't seen this kind of head back up, but it's sitting right there. So one to keep an eye on that we'll look at. Now, with that said, keep an eye on, this is my last, I'm going to miss you guys. Please, someone's going to be teaching this class next week, but it won't be me. I'm not going to be here next week, taking a little trip with the family. So I'm going to be gone next week. And so that'd be the 18th. And then of course, the week after that is the 25th. And so that's Christmas. So we're not going to have a class then. And then the Thursday after that is going to be New Year's. And so obviously we're not going to have a class then. And so the next class we're going to have together isn't until January the 8th. So it's going to be a minute until I see you again. So, keep an eye on my X handle. I'll post some follow-ups on these on my X handle. But I won't see you again. I myself, we celebrate Christmas. And so anyone who celebrates Christmas, very Merry Christmas, since I won't see you until after that. And if you don't, then very happy holidays for anyone else. Please enjoy however you celebrate your time. And thanks for joining me, though. Thanks for joining me, each and every week. We'll keep an eye on these and see what else comes down the road. And hopefully this discussion on Fibonacci gave you some insights on new ways to identify where those potential bounces are and potential opportunities to place most paper trades. But keep an eye on it. Until then, have a great time, and we'll catch you later. See ya.